What's going on, everyone? Welcome back to the Modern Mortgage Show, where I interview mortgage professionals who share their stories and modern information about the industry. I'm your host, Rocco. I'm happy to introduce my guests for today's show. My guests are Joe and Amy. Joe is the mortgage broker and owner, and Amy's a loan officer at Lakeview Funding Group out of Howell, Michigan. Joe and Amy, welcome to the show.
Thanks for having us.
So, can we just start off the show? Can you just tell us, why don't we start off with Joe? Can you just tell us a little bit about yourself? Give us a brief introduction of who you are.
Sure. Yeah, so Joe's grew up in northern Indiana, been living in Michigan for a long time now. Been in the mortgage business for about 23 years, subprime for about 10 years, and the last 13 years in retail, call center, self-generation, operations, sales, and all that, and been a broker on my own for just over a year now. So I decided about a year and a half ago, you know what, I'm just going to go out and do it on my own. Just something I wanted to get out and do. So I set it up, licensed in Indiana and in Michigan, and serving any first-time home buyers, repeat buyers, refinances, pretty much offer the whole spread of everything that's out there.
You said you've been in the industry how long?
23 years.
Wow. Okay. And then Amy, can you tell us a little bit about yourself?
Sure. So my name's Amy Parlove. I'm on the total opposite spectrum of Joe. I am brand new in the business. My background's actually in exercise science and health education. Probably about 12 years ago, I started a small office design business really out of just a hobby. I still hold that business today, but brand new in February. My husband has been in the mortgage business for almost 30 years. He knows Joe very well. And he's been bugging me for years to get into it. I'm a people person, and I really love to connect with individuals and helping them. And so it just seemed like a natural fit. So this has been an interesting time for me being brand new in this business.
Yeah. So Joe's been in the industry 23 years. You're fairly new. Joe, did you do any type of work before you got into the industry?
I was in auto finance for about 4.5 years, anywhere from collections to buying auto paper in Chicago area. I worked downtown Chicago for a while and in the suburbs too. So pretty much finance for almost 30 years of my life since I got out of college. So.
Oh, wow. And Amy, what business do you have again? Exercise science?
That was my degree originally. No, office design. So like right now I just have one client. So this is a perfect industry for me to get into. I work out of the house, and it's just for me awesome to connect with people.
Yeah. And you already explained your story, how you got into the industry. It seems everyone has a different story. Joe, what made you get into the industry?
Ironically, Amy's husband called me 25 years ago when I was buying auto paper and said, hey, we got an underwriting position available. You want to move to Michigan from Chicago? So went up, interviewed, got the job, and bounced around Detroit, Nashville, Virginia Beach, back to Detroit. So kind of been all over. So.
Oh, funny stories. So we're in very strange times right now. And uncertain times. What are you guys doing to get past this period of uncertainty?
I think for me, the biggest thing has been staying connected with your clients. It's building the relationships and keeping them going, because we all, as you can see, I mean, I'm working, this is my laundry room right here. I mean, we're all working in a different environment. I've got kids home that are going to school. It's different. So really for me, it's been trying to stay connected and keeping your clients informed and giving them valuable information, because there's a lot out there with the media. I mean, every day you can turn on the TV and see something different or hear something different, and it's scary. It's scary. So providing our clients, I think, with good connection and good value.
Mm-hmm.
Yeah, and like Amy said, keeping them informed. Obviously, there's a lot of guideline changes going on. And the other thing we're doing is, and we're newbies at this, Rocco, is the social media stuff. Me and Amy try to meet once a week. We shoot a couple videos, throw them out. Not our forte, but you know what? You got to go out and do them. So we're talking about forbearance and different loan programs and stuff like that, hitting Instagram, Facebook, LinkedIn. So trying to get some messages out that way as well of what's currently going on. So.
Yeah, absolutely. Joe, you've been in the industry a long time. Amy, I don't know if you would have an answer for this question, but Joe, with what you're seeing right now going on in the industry, what do you see happening in the future?
I think what you're going to see is you've seen a lot of contraction, even as far as recently as this last week, the cash out refinances, they're limiting LTVs, they're limiting who's credit scores and stuff like that. As people slowly get back to work, you should see the market break back open. Obviously, I lived it in 2007 when it was more of a financial crisis than an actual health pandemic.
Mm-hmm.
Those, they tightened down pretty tight then. This year, we're hoping we'll see a pretty quick spring back into similar to where it was. I don't know if it'll fully be where it was, but that's what we're hoping and looking at. And just once people are back to work, the biggest thing that's going to hurt the borrowers is the forbearance. There's a lot of misunderstanding out there. A lot of the media is pushing the forbearance like, go ahead and do it. It has no lingering effects. There's the standard effects are pay the payments to get the current on your forbearance agreement, make 12 payments on time, then you can refinance or purchase. Nobody knows if they're going to lift those restrictions, Fannie Mae, Freddie Mac. So that's what we're hoping in the next 6 to 9 months, seeing it loosening back up and getting back to where we were prior to this. So but it's hard to say. Depends on really how many defaults there are and forbearance and all that, so.
Mm-hmm. Yeah, definitely. Moving along here. So, Joe, you got into the industry from a phone call from Amy's husband. Amy, you got in the industry from your husband. So you said you're a people person. What would you say is the most satisfying or rewarding thing about your job?
Oh my God. I think for me, the biggest thing, and my husband said it would happen, and he was right, is that first time home buyer. I think providing them with good education and good connection so that they're able to get into something that maybe they never thought they could do. The satisfaction of seeing them being so happy and so excited about the next steps, whether it's they're just, newly married or, they're starting to have children and you're moving them into a great neighborhood. I mean, that part for me is super exciting.
Mm-hmm. Yeah, definitely. There's nothing like seeing your service impact someone's life. And you guys are impacting their life a ton because this is one of the biggest investments people make. Joe, what would you say is the most satisfying thing about your job?
Most satisfying thing is it's just helping them realize whatever their goals are, whether it's a refinance, in the last year, obviously with the rates lower, taking a lot of people out of 30 years, putting them in 20 or 15-year terms, saving them a ton of money interest-wise, shortening the term of their loan. So really in that, doing a lot of that. And then as Amy said, helping the first-time home buyers. I helped a very young couple back in December buy a house and I went to the closing and everything. They actually did the signing right at the house that night, and they were just ecstatic. They couldn't believe that they actually qualified, got a home, and at the same time, they got a great rate when they closed. So they were very, very excited. So
that's amazing.
Yeah.
So you own your own broker shop. For the viewers watching, what is a broker shop, and what are the advantages to using a broker?
The advantages of using a broker are we're signed up with multiple lenders, so we can shop loan programs and interest rates with. I'm approved with 8 different lenders right now, so I can go to each one. Any given day, somebody may have a better rate on a 30-year fixed or a 15-year fixed than somebody else. So we have the ability to shop those brokers. And the advantage of also being a broker is the autonomy. We can set the speed of what we want to do. I've got lenders that'll close loans in probably 2.5 weeks. I've got some on one given day may have a lower rate, but they're going to take 30 or 45 days. So once again, as Amy said, you inform the customer, all right, you're looking to close quick. Closing 45 days doesn't really matter. Then that's how you approach it and know where to go. So, and I came from the retail lending side. Still have a lot of friends on the retail lending side. It's a good channel, but for me, I love the broker channel just because I can get out there and do what I want. So I'm not restricted by a company I work for and their guidelines and their parameters. So.
Yeah, makes sense. So shifting gears here, Amy, we could start with you. You're fairly new to the industry. What were some struggles or obstacles you'd faced early on? I know you started in February, or that you're facing right now because you're so new.
So I just think maybe just because we are a broker shop, really educating and knowing different lenders well. So this time at least has provided me with some time because things are a little bit slower for us. The education piece for me, really educating myself on each of the different lenders, how their systems work, how their rate sheets look, how their how quickly, as Joe said, how quickly one lender may close versus another. So, you know, the people part for me is the easy part, which is great. So what I've had the luxury of doing with Joe being in the business so long is leaning on him for all maybe the things that I'm not so well versed on. You know, interesting question when a customer calls. Interesting question. Let me get back to you on that answer. So, and then able to go back to Joe, and sometimes we both hop on the phone with the customer and say, you know, if I can't quickly answer a question, he can put it in simple terms for me, for the customer to understand it. So really for me, it's been education, which again, this time's been awesome for me because I've really learned a lot in a short period of time.
Yeah, definitely. And just with experience that problem will soon go away. Joe, when you first started out, what would you say were some struggles that you'd faced early on in your journey?
Oh boy, back 23 years ago, literally everything was handwritten on paper. We were just getting to like Word document approval letters. I started off as an underwriter, and it was you had probably 10 or 12 different sets of guidelines that weren't online. Everything was manual, you know? So you had to flip through all the different books to figure out, all right, what's the guidelines or how's it work? The automated underwriting systems were just coming into play. So that kind of stuff. But what it did teach me in manual credit grading, stuff like that, it taught me the nuts and bolts of the industry. Yeah, it's changed and evolved, and obviously technology's played a big part. But that also helped build the foundation that I have of knowing, all right, even as all these changes are coming over the last 6 weeks, you're phased by them, but you're not, because you've seen it all and you understand, and now you can know where to go and where to look. And it's a lot easier today to jump online and pull up guidelines than it was 20 some years ago. So
yeah, and what about your own broker shop about a year and a half ago? Did you have any struggles when you first started out?
Not too bad, because my background was operations, and I had set up a loan origination system for a company that was a lender probably about 4 years ago. So I lucked out on that. The biggest thing is knowing you need business plans. You need there's about 5 or 6 different things that the state of Michigan wanted, and then 3 or 4 different things beyond that that the state of Indiana wanted. So walking your way through that. There's some lenders out there that help coach people on what they're going to need to get licensed in each state to do a good job, and then just being complete as you can when you submit your applications is the main thing, you know. So
absolutely. If you guys had to give a piece of advice to someone that's just starting out in the industry, or even to yourself when you first started out, if you were talking to your younger self, what advice or what tips would you give?
I think that relationship building. I mean, and it's not only relationship building with your clients, because in this time that we're in right now, you know, unfortunately, some of our clients have been laid off, they've been furloughed. So it's staying in touch with them and staying connected in a valuable way, in a valuable way. So it's not just a quick, you know, email. It might be a phone call. Hey, how's it going? How's your family doing? Is everybody staying healthy? Are you staying safe? I think that is been a great piece. I think a takeaway for me is you really have to stay in touch with your clients. Secondary to that, though, is staying in touch with people in the business. So I've learned a ton from podcasts, webinars. I'm already working on my continuing ed for this year for my hours. So that kind of stuff, I think, for me has been very important.
Yeah, definitely. Continuous education. Joe, what advice would you give to someone starting out in the industry?
you know what? The number one piece of advice, because I learned it the hard way on a couple different scenarios, is it's always easy to deliver the good news, but you got to be able to deliver the bad news right away. I.e., a purchase is falling apart or something. You know what? You have to know how to do that, and you have to make sure you do that, because if not, you'll destroy not only your customer and referral partnerships, you also destroy your realtor relationships and partnerships. So that it's not always the news everybody wants to hear, but if you don't do it, it can have devastating impacts later on, especially in this business where we're self-sourcing loan originators. We don't buy leads or anything. So all of our business is built on reputation and referrals. So you got to make sure that we're taking care of the customer. So.
Yeah, makes sense. That's very, very important. So speaking of technology, in recent years, technology has made its way into the industry. It's definitely impacted it and revolutionized it. How would you say this has affected your guys' business? You already touched on it a little bit earlier.
Yeah, you know what? For me, I love it. Because like I said, I was literally handwriting approval letters 20-some years ago when I was underwriting loans. So I've embraced it. We've got lenders, and obviously now with the coronavirus, that are doing the virtual e-closings. So I've done a couple of those with customers, and I love the automation of being able to take my whatever lender I choose, upload my docs, and do everything on their system myself and not have to wait for somebody else. So I embrace it as much as I can. Do I run into frustrations? Absolutely. The first couple times you go through a system that, you don't understand, it's tough to use, but I like it. I really do. So
Yeah.
Mm-hmm.
And would you say there are any modern strategies that you guys are using to either scale your production or maintain better relationships with past clients, or just even to organize and systemize your business?
I think the social media piece is the biggest piece that Joe and I have tackled. And I think he mentioned it earlier that we're trying to weekly shoot several videos to put out, and they're not all related to mortgages, which is kind of fun. It's just different things that we can stay in touch with our clients and or partners that are fun. I think we did a couple last week, Joe, that what was your favorite athlete? I know one of the ones I put out was, how old were you when you bought your first home? Just fun little snippets that help stay connected. So a little bit of a challenge for us, but we're figuring it out.
Yeah, like you said, being connected and staying in front of people. So where would you say you see all of this going in the future in terms of technology and how it impacts the mortgage industry specifically?
I think you're going to see pretty much every closing sooner or later go virtually. They tried implementing a lot of this back in 2006, 2007, before the market crash. I knew some guys that were on the tech side of a First American Title working on it, and they were 10 years ahead of their times. But obviously with the coronavirus, everybody having to work from home or work virtual, it's pushed us to the forefront a lot quicker. And like with technology, less people touch it. The more technology you have involved, usually there's less mistakes. So I think you'll start seeing counties, if they can adopt it and it cuts costs on their end, and then obviously the lenders, they can cut costs on their end. So I think it's going to just continue to evolve. And, there's some different software programs out there now that are actually, you put everything in there, and then when you're ready to go, they already got all your information, you know what I mean? So that you're not even gathering documents as you go along down the line. So.
Yeah, definitely streamline and automate different tasks. And you must evolve and adapt to it, or else you're going to get left. But
Exactly.
Saying that I think there's always going to be that human and personal touch to it. There just has to be. But yeah. And last question here. Let's go to the buyer side now. You guys say you work with a lot of first-time buyers. What would you say is a big misconception or even fear that they have going into the process before working with you guys?
Joe, you can probably answer this question better than me, but I guess the experience that I've had so far is I can't afford it. We can't afford it. So they've been putting money, throwing money away, putting into an apartment or a condo that they don't own. And really, in essence, when you sit down and you can break it down for them, they can easily see that, oh my goodness, I can be a homeowner. So I think that's probably the biggest one I've seen.
Yeah, especially with where the rates are today, a lot of people's mortgage payments are actually less than what they're paying in rent, So and then the other biggest thing is the misconception of how much money you need down. There's programs, rural development, VA loans are no money down. FHA 3.5%, conventional has as little as 3% down. So obviously there's currently with everything that's going on, there's some restrictions on some of that as far as reserves and overlays with the lenders. But those are the two biggest ones, as Amy said, not being able to afford it, and then the amount you need for the down payment. So it's, those two things.
Credit as well. Would you say credit?
Yeah.
I know the guidelines have changed right now.
Mm-hmm. Yeah, you're seeing it. I mean, the FHA just went through, most of them raised the FICO score limits because of the pandemic. Hopefully those come back down, because that's a great loan program to get a lot of people into the first time home buyer, because it's minimal down and it's affordable, so, but yeah, but that's the main things. And then some of the people are, they don't think they're ready, this and that. And some of them are, some of them aren't, and then you just work with them and try to, if it's credit scores, try to kind of coach them. What do they got to do to get the scores up, and then try to qualify. So.
Yeah, and it's definitely to communicate with them and just advise them and educate them throughout the whole process, because this, like I said, this is a scary investment for them, and they want to be confident that they're doing the right thing. And that really comes down to finding, the right mortgage advisor to walk them through the process and basically just explain everything, because there isn't a one size fits all. It's just based on everyone's situation.
Right.
Yeah.
Mm-hmm.
Well, Joe, Amy, I really want to thank you so much for coming on the show today. I had an amazing time speaking with you guys, and I really, really appreciate your time.
Thank you.
Thanks for having us, Rocco. It was a good time.
Thanks, Rocco.
Thank you.
And thank you to all the viewers for watching, and we'll see you again next episode.
Take care.